Warren Buffett, one of the greatest stock pickers in history, told his wife, "Don't pick stocks. When I'm gone, put 90% of my money into one simple ETF." That's not a joke. That's from his actual will. So what exactly is an ETF, and why does the world's best investor not even trust himself to beat it? That's what we're finding out today. Welcome back to Drawn to Wealth, where complex investing ideas get broken down so simply, anyone can act on them. Last episode, we talked about what the stock market is. Today, we go one level deeper. By the end of this video, you're going to understand exactly what an ETF is, how it works, and most importantly, why it might be the only investing tool you'll ever actually need. Let's get into it. Okay, imagine you're at a food court. You could invest all your money at one restaurant. Maybe it's great, or maybe it closes next week and you lose everything. Or you invest a little bit from every single restaurant in the building. Pizza, sushi, burgers, Thai food, all of it in one tray. If one restaurant has a bad day, you barely feel it, because the other 499 are still cooking. That tray is an ETF. An ETF, exchange traded fund, is a bundle of hundreds or even thousands of stocks packaged into one single thing you can buy with a tap on your phone. One purchase. Instant ownership in hundreds of companies. That's it. But here's where it gets really interesting, and where most people get confused. Who decides what goes inside the bundle? The answer is almost nobody. And that's the whole point. Most ETFs track something called an index. An index is just a ranked list of companies following a rule. The most famous one? The S&P 500, the 500 biggest publicly listed companies in the United States. So, when you buy an S&P 500 ETF, like VOO, IVV, or SPY, you automatically own a slice of Apple, Microsoft, Amazon, Google, all 500 of them in one go. No fund manager, no guessing. No fees for someone's expertise. The ETF just follows the list. That's called passive investing. And it sounds boring until you see what it actually does to your money, and we'll get to that in a second. But first, one thing that surprises most beginners. Unlike mutual funds, which you can only buy or sell once per day at a price set after the market closes, ETFs trade live all day, just like a stock. This means you can buy when the price dips, you can react to news, you have flexibility, and the cost? Some ETFs charge as little as 0.02% per year. Compare that to a mutual fund charging 1% or more, and over 30 years of investing, that difference alone could cost you tens of thousands of dollars. This is not a small thing. Alright, here's the section I want you to pay close attention to, because this is where it stops being theory and starts being real. 3 reasons the smartest investors in the world prefer ETFs over picking individual stocks. Reason 1, diversification. You don't bet on one horse, you bet on the entire race. If one company collapses tomorrow, and keep in mind that companies do collapse, your entire financial future isn't gone with it. Reason 2, low fees. Fees are the silent killer of wealth. A 1% annual fee sounds tiny, but over 30 years, on a $50,000 portfolio, it could cost you over $100,000 in lost returns. ETFs charge a fraction of that. Your money stays working for you. Reason 3, performance, and this is the one that stops people in their tracks. VOO, the ETF that tracks the S&P 500, has returned 535.65% since it launched. Every $10,000 invested turned into nearly $60,000. In the last year alone, up 34.64%. Over the last decade, an average of 14.15% per year, consistently beating most professional fund managers who charge you way more. Yes, 2022 was rough, down 18.19%, but look at 2019, 2021, 2023, 2024. The patient investors who stayed in won every single time. 3 things. Lock these in. Hatul. 1. An ETF is a basket of stocks you buy like a single share. Instant diversification. 2. Most ETFs passively track an index, like the S&P 500. No fund manager, low fees, no guessing. 3. Over the long term, simple ETFs have outperformed most professional stock pickers. Boring? Absolutely. Effective? The data doesn't lie. Now you know what an ETF is. But knowing what it is and actually knowing how to use it, those are 2 completely different things. In episode 3, I'm going to show you the exact 3-fund portfolio that financial experts have been recommending for decades. Simple, low cost, and built to last. If you don't want to miss that, subscribe. It's free, and it might be the best financial decision you make this week. Drop a comment below. Are you already investing in ETFs, or are you just getting started? I read every single one. See you in the next one.